Hello, traders. Gary Wagner here. Approximately 12:36 in Honolulu and 5:36 in New York on Wednesday, 2nd day of March, 2022. And this is the daily report for gold and silver. Both gold and silver had moderate declines today based on the fact that Russia and Ukraine are at the negotiating table. However, the likelihood that there will be any outcome but a stalemate is extremely remote, if not impossible, because each of these countries' demands are the exact opposite of the other side. Gold, basis the most active April contract, lost $13 in trading today, 0.067%, and is currently fixed at $1,930.80. Silver had a moderate decline of about 0.5%, with March silver currently fixed at $25.41.5 after factoring in today's almost 13-cent decline. And it was really dollar neutrality, combining either strength nor weakness to the price of the precious metals. The dollar gave up 0.03% and is currently fixed at 97.38. The one market that continues to spiral out of control is oil. Light crude oil gained another 7%, with the cost per barrel now at $111.40. With concurrently rising food costs, especially in Europe, because Ukraine is really the breadbasket for much of the agriculture that comes into Europe. Those two items almost guarantee that we will continue to see inflation run hot and higher. Chairman Powell spoke before a Senate Banking Committee and said that they are still in line to do an interest rate hike in March, but that interest rate will only be 0.25%. Today's decline was moderate, so the first thing we need to discuss is whether or not the decline in pricing caused any kind of technical chart damage. We can say with almost clean-cut certainty that the answer is no. And we can make that determination by just looking at a couple factors of market action today. The first thing is that the low was a higher low than the previous day, and that is what we have seen as this market has ascended down from approximately $1,780 to current pricing near $1,930. Currently, we are trading overseas at $1,931, and that's represented by this small line here. Yesterday, we did raise our stops. Now our current stop is at $1907.60. We still remain long at $1,893. Based on recent action, I see no need to trail our stop up higher. I do not want to trail a stop up to put it within the inherent volatility or price range on any given day. So maintain your current long position as well as your stop. Our initial target for our exit strategy remains currently at $1,975 per ounce, and it is simply based upon the intraday high that occurred last Thursday. Above that and below that, we need to look at current support and resistance levels. But first, I do want to make an observation on our moving averages. We have been looking at them over this last week. We can see that the space between the 50 and 100 day is definitely in a position of divergence. In other words, they're moving farther apart, as well as the 200 day in relationship to the 100 day and in relationship to the 50 day. That type of divergence is what we want to see to indicate continuing strength and technical indication that higher pricing is ahead of us. Lastly, I do want to take a look at support and resistance levels. Of course, we have absolute major support at $1,880. It is based on this top right here, and I don't see the market challenging that price point, definitely while in a rally mode. In terms of the next level of support, that comes in at $1,920, and that is roughly $11 below current pricing. We spoke about the resistance that occurs based on the intraday top that occurred on Thursday. However, there is slight resistance based on this top, and that comes in at about 1960. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.